Well, it is expected to be a good quarter for Reliance Industries. Remember, the stock is up 21% already this year so far. In terms of revenues, we are expecting a decline to come about by 8%, but it will be strong margin expansion that we'll see. So EBITDA expected to go higher by 3% and margins expected to see a 200 basis points increase coming around at 18.7%. Profits accordingly will see an increase of 16% to come in at 22,024 crore rupees this quarter. If we talk about the internal details, what will drive this growth for the company this time? It will be O2C, digital and retail, which will see strong growth for the company. However, it will be offset by weakness that we'll see in the oil and gas business. O2C will see an increase of 19% YOY in terms of EBITDA and 3.5% on a sequential basis. However, refinery shutdown is something that could impact some of the profits this time around. Jio ARPU, that is expected to increase by 1% on a sequential basis, and retail business EBITDA, that will see an expansion on the back of Jio Mart scale-up, operating leverage and increasing footfalls as well. So in terms of EBITDA, we'll see that it has been continuously increasing. Last quarter was around 43,000 crore rupees. Before that, a similar number. And this time around, we'll be seeing a 5-quarter high EBITDA coming in for Reliance Industries. So good set is expected from the company this time around.
Expect a steady quarter from the telecom arm of Reliance Industries, Reliance Jio. So on the top line, a 3% growth, 30,900 crore rupees is the CNBC-TV18 poll on the revenues. This will be driven by one extra working day in Q1 versus Q4, plus about a 2% increase in the subscribers. So net subscribers will go up by 2%. That's basically your volume. And ARPU expansion of approximately 1%, taking the ARPUs to 208 rupees per share. Margins for the company have been broadly stable. And this time, the CNBC-TV18 poll is about 53.7%. And the profit number that we're working with is 6,675 crore rupees. Just a couple of trends. One on subscriber. You know, the recent TRAI data seems to suggest that Jio has been adding more subscribers than Airtel. So we are expecting a pickup in the subscriber addition this time. The poll throws up about 8 to 9 million subscribers in the current quarter. And even for ARPU, the last tariff hike took place in July. So we had that big jump up from Q1 to Q2. But what the company indicated is that even this quarter, we will see a little bit of an impact of the flow through of that tariff hike which took place last year. So tariffs will go up from 206 rupees, which happened last quarter, to about 208 rupees in the current quarter.
For Reliance's retail vertical in the first quarter, the street expectations are fairly simple. Expecting operational improvement and good revenue growth. Put all these together, what is it that the numbers will show up? 16% revenue growth, closer to 88,000 crores on the top line, led by a slightly faster growth in the operational performance, 18% EBITDA growth, 6,700 crores on the EBITDA level as well, which would mean a marginal improvement in the margins from 7.5% to 7.6% itself. Remember, the company has been reporting margins in this band itself for the last few quarters. What is this growth likely to be aided by? One, a favorable base, and secondly, the completion of store expansion rationalization that Reliance has done. So that will further improve operating leverage, and we are expecting around 225 to 250 stores being added quarter on quarter, which is a slower pace than what we've seen in the past. The revenue per square feet, as a result of which, grows between 18 to 20% for Reliance Retail. The other important thing that the street will keep an eye out on, operating leverage and better revenue per square feet, which will lead margins better from here on itself and not just the first quarter. Reliance Consumer Brands, that's something that will be the cynosure of all eyes in this result. Why is that? Because in just its second year of operation, the company has gone ahead and crossed 11,450 crores in revenue. That's the fastest growing FMCG company that we've seen in the country. They've gone on aggressive footprint expansion by Campa, and some of their new verticals are doing extremely well, the likes of Tira, Ustar and Swadesh. So a good quarter all in all expected by Reliance Retail.
Well, auto chemicals business for Reliance Industries will be a growth driver. Strong margin expansion is what we're expecting. However, the throughput will be lower because of some maintenance shutdowns. Remember, Singapore GRMs, they are up 81% sequentially, 60% on a YOY basis. And that is the reason the recovery in Singapore GRMs will drive margin improvement for the company this time around. However, throughput, that is expected to be lower, 3% sequentially and 1% on a YOY basis because of maintenance shutdowns that the company took in the month of April. Overall, Jefferies expects the oil-to-chemicals EBITDA to be up 13% on a YOY basis, however, down 2% on a sequential basis because of that shutdown. But still, it will be a decent number that we'll be watching out for. This is about oil to chemicals. Let's talk about the oil and gas business as well, where EBITDA is expected to fall because of natural decline in the KG-D6 production this time. And that's why Jefferies expects the EBITDA to decline 10% on a YOY basis and 1.2% on a sequential basis. If you look at the trend as well, it has been a continuous increase, but on a sequential basis, this time around it will be a decline because production volumes, that will come down.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.